Good morning. It's March 4th. This is an audio update on the stock market. It is 8:37 a.m. Eastern Time. I'm Rich Pawson for Critical Point. Okay, tomorrow I believe we have the jobs report for February. Yesterday ADP came out, I think, with 117,000 when I think Dow Jones might have been up around 180,000. This upset the market. They were concerned of that. However, ADP does not have a very good track record. I don't know if anybody has a good track record on the jobs report. It is a volatile number. At any rate, I think my gut feeling is that I think there's possible they're going to get a surprise that it's actually better than the prior couple of months here. We may see something in the 142, 144,000 or higher, and that should help the market out here and give it some better support. However, it is a very difficult number to predict, and I haven't even kept my track record, and I don't even bother looking at it basically most of the time, and I don't try to forecast it. But my gut feeling is, looking at it as of yesterday, I think ADP is low, and they have a history for being low, and I think it's going to be better than that. Problem is, it may come under the Dow Jones number, and people may not, they may take a neutral to bearish attitude anyways on it. But I'm thinking if you can get a 142 or higher, I don't know why they wouldn't be a bit positive here. Now, something else to watch, and it may even come today, because I think Fed Chairman Powell is speaking today. What they're watching out for is, will he give at least a hint that he could go back to, or the Fed could go back to the twist, Operation Twist. And I didn't realize that twist was even done in the 1960s. I thought it was something that was done in the 2000s. But at any rate, that twist thing can lower long-term interest rates, hold them back somewhat, and raise the near-term rates. That may bring in a little bit of stability, because there's been some worries that the overnight market and interest rates is sloppy, and that tends to scare bond market and the stock market, okay, because it's a worry of, is there something wrong with our financial system? Most of the time that tends to go away. Most of the time the Federal Reserve kind of calms it down, controls it a bit. But some people are wondering, is some day coming where they simply can't control it? It is something to think about, okay? But if Chairman Powell would ever mention, and that's what they're saying, just mention it. They don't have to say they're doing it. I think it's going to put a positive tone underneath the market. And if the others said they are going to do it, I think it's up and away for the market personally. I could be wrong. There might be an immediate reaction the other way, but my guess is they'll turn around, put the stock market up. So those are the two things we need to watch. Everything else seems to be on the back burner, okay? The economy is growing. It's doing well when you look at the overall economy. Inside, it's doing poorly for some people, and that's still going to linger. We still don't have the stimulus package passed, and it looks like they're going to trim it back, and I'm fine with that. I felt like they were giving money away for too high a level of income, okay? They're talking about that if you're making $80,000 a year more, you're not going to get it. Well, I always thought you shouldn't have been getting it anyways, that it ought to have been met for the lower income levels, and then save us some money on this, help out more. I'm hopeful this will be the last stimulus package. We don't need any more, but I'm open to the idea of maybe doing more specialized, smaller, focused, helping the worst hit people there. I'm fine with that, because the quicker we can get out of this K economy, the better, more smoother economic growth we will get. Nothing has changed my opinion long term, and I touched base with some major analysts. I shouldn't say touch base, I just found some comments, and it looks like they're still on board. It was even interesting, Jim Cramer over at CNBC, even though he's nervous over this jobs report, saying earlier in the week he said it could create a tsunami of selling. Maybe, but I don't think so, all right? But he also came out saying, like, travel stocks are probably going to soar, that by summer he's thinking people are going to travel. They've got cabin fever. They've had enough of this virus session. They want to get going, get out there and do something. And he literally said he thought those stocks would soar. Over time, we'll work through this. The trend is up. It's a long-term bull market. But right at the moment, we got a sloppy market on our hands, okay? We just don't have the conviction of those buyers. And even though the interest rates jump and the bonds fell, it could be more hedging, short selling of bonds, and really there wasn't much money that actually pulled out of the bond market. We won't know for a few days to a couple of weeks perhaps. But I'm thinking there must have been some money that came out of the bond market. And even though most of it could, I suppose, go into the global markets, global stocks and bonds and real estate and help the global economy, and the dollar kind of gave us a hint of that last week, earlier in the week. But at the same time, I'm thinking there's got to be something that came out that's going into U.S. stocks and commodities and real estate, and it's going to help the U.S. economy. I view the bond market as kind of this money tree that we just have to shake from time to time, get the fruit to drop to the ground, and we pick it up, okay? And I think there's just too much money that was put in there because they just felt like they had too much money in the stock market. And if they will put that money in the stock market, it's a sign of confidence of our economy. So this is just some of the things I'm rattling around in my brain. But where are we right today in some of this analysis? And I'll do the video tomorrow, the weekly update, where we'll look at everything very short-term to long-term, although I may not spend much time showing charts long-term. I'll probably discuss what's going to happen in the next few weeks to a few months. At any rate, there's a possibility the market's coming back this morning, that this is a level 3 bottom, and that there's a possibility we can see higher tomorrow, okay, which would probably mean the jobs report was at least okay, and it wasn't any kind of bearish negative thing. But obviously, if it violates the overnight low of today at 3777.5 on the March S&P E-mini futures, we do have to be concerned there's still lingering sales. I don't like how the Dow Jones behaved relative to the drop in the S&P 500 and NASDAQ. It at times was actually up. And I'm thinking, how can it be up when we're seeing this kind of sloppy, choppiness, volatile, big down days? I think that worries me, that it's actually liquidation in the stock market, meaning they're pulling their money out, and therefore they don't need to use the Dow Jones as a hedging tool for the S&P 500 and NASDAQ. Meaning, if you're worried about the market going down but you don't want to let go, you buy some insurance and you short some futures. And I've always felt for a decade now, Dow Jones gets picked on. It's kind of the whipping boy for that kind of thing. They sell the Dow Jones and they're long, meaning they bought and holding the S&P 500 and NASDAQ, and they're going to play in and out of that Dow Jones as a method to make a little money on the downside to cover their losses in the rest of the stock market on the downside, to make them feel more comfortable that they're managing it, they're trying to stay with a position. When they no longer do that and they're actually just selling stocks, that's money flowing out. That's not such a good sign. So we do have some things here that are problematic, but overall I think what we're looking at is this is just stalling out before going higher later this year. And it's possible we got a level 3 bottom today. Unfortunately, I have to warn you, it may take a few days yet. It may not bottom early next week. And we do have to be concerned what happens tomorrow on the jobs report. Are they going to panic, or do they panic for just a few minutes and they buy the rest of the day because they dialed it in? But this is pretty choppy, sloppy behavior for about 5 days now. It's very volatile behavior. We definitely hit a slug of selling in the stock market, but someone is buying it up. And who's going to win? And for the moment, the ones that are buying it up haven't been able to really calm the market down and hold it. So that's how aggressive they've been. Again, the interest rate surge upset the market, and I think that blows over eventually, and we got to get used to higher interest rates and not panic and sell our stocks. And I saw a lovely report here the other day saying, seems like investors who are constantly looking for reasons to take profits miss out of the bigger bull market. And that is something to consider. So yesterday I wrote my monthly column and wound up, and it always fascinates me that there's like the same day I put it out, suddenly there's these news articles that kind of go against me or for it. Someone come out against me a little bit on the climate change portion I put on. Someone, and they didn't cite me, I'm saying they just had another opinion. But interesting how quickly someone also came out with something like that. There's also some supportive things. But it looked like to me lots of discussion yesterday suddenly come up that was really net long-term bullish in these markets. It's just a matter of handling this choppiness, this noisiness. And I've often felt maybe the stock market doesn't do so well into from March into April, and it may even have something to do with Texas. Okay? So something to think about, that there's some kind of seasonal pattern there. ultimately, I think we work our way through this, go higher, but we may have more choppiness than I realized for a little while now. And we should consider this has been an impressive bull market since March of last year. It should stall out for several weeks at a time and maybe even months. So maybe it won't work out so much in my near-term bullish scenario, but I'm willing to bet still that it's actually going to at least be up somehow, some way. So no change here. I'm not backing out of anything, just manage the best I can. And I'm rather hopeful maybe we get a decent jobs report tomorrow, we see the market up, and we probably just put in some near-term, short-term low within our long-term bullish scenario. In the interest rate market, we can see some consolidation here. I think the interest rate should back off this month. I don't know how much, but we just have to consider they may be higher later in the year, and you can still get interference for us in the stock market from that rising interest rates. Long term, it's a good thing for the interest rates to go higher. Short term, any kind of surge, panic, sudden move, however, is going to be bad for stocks for a little while. That's just how they do it, and you can't seem to teach them to do anything different. I don't have good feelings about gold. I don't have much to add for the dollar. I don't think it's going to do much of anything. Crude oil, fascinating. May still go higher into summer, and someone's saying the gasoline stocks were down sharply. That's positive or negative. I don't know. I kind of feel like they're just trying to tighten up their market to get a good price that's going to help them later on in business. But I kind of feel like this summer people are going to do more things. They're going to get going, and I think that's going to stimulate the economy more. But it's also going to raise inflation. We're going to have some higher prices for things, and the inflation trend and interest rate trends can be up through this decade. At any rate, on a very short-term basis, we'll just obviously have to see how they handle any discussion from the Fed's Powell in terms of discussion today. And then, of course, tomorrow we're going to have to deal with the monthly jobs report. Manage your risk relative to others. If you ask my best opinion, I think it's trying to forge a level 4 bottom and will be up tomorrow. And I'm also going to watch yesterday's high in the March futures at 38.98. If it trades above that, I think that's a level 3 top. And if it trades above that before it's time for the next level 3 top, then it should continue higher. And if it were to put a level 4 bottom in today, or maybe they do have to sell it off one last time on a poor jobs report, then I think they're probably going to buy this thing next week, and they may need to buy for about 5 to 10 trading days is what the model's setting up for. So shaky ground here. I fully understand a lot of people might not know what's going on here, but as I zoom out, I don't see any change to the long-term bullish scenario. Manage your risk relative to others. Thank you.